Jeff, my God, I cannot believe all this time I was basically speaking with the muted microphone. Thanks for bringing that to my attention, Jeff. I guess it's going to be time for me to go back and rewind and re-explain everything I did. Sorry for that. But anyway, so let me highlight this particular information on the screen. So notice I just highlighted that today during the session, to have a more efficient communication, more efficient interaction, we're going to use an app called SpeakUp. So it's a free app that you can find on the Apple App Store or in the Google Play Store. So please download it as we speak. Search on your phone for SpeakUp on your store. It's a free app. Download it, install it, and then input the chat room number 18865. So that way, instead of interacting using the chat box, as we often do, which is fine, nothing against that, many of you have shared that you would feel like having a little bit of a more private method on how to interact. And therefore, instead of utilizing the public chat box on YouTube, for example, or Facebook, we are going to be using SpeakUp. Okay, so please go ahead and thanks for that, Jeff. Go ahead and install it, input the key number for the chat room, and you will be in with me. And once you do, just type hello so I know you are there. Okay, cool. Now, in parallel, I wanted to go back to say that we are running this multi-asset CFD session in partnership with City Index. So again, a pleasure to team up with such an impeccable broker in the world of CFD trading. CFDs are very advanced financial products. They are highly leveraged, and therefore not understanding how trading works, not understanding how the markets work, or not using the right broker could be really problematic. So the idea in the sessions was, as we get live every week, it's to fine-tune our skills as well as understand the use of City Index as a broker. So by putting the two together, we should be okay, isn't it? Anyway, I highlighted on the screen the financial disclaimer. It's been there for a while, so I guess that all of you had time to read it. And also, I wanted to highlight our agenda for today, which is very simple, to be honest. We're just going to get organized. We're going to talk about how to connect to City Index, how to get the market data on the screen, which platforms we're going to use, etc. We'll talk about these very quickly, and then we'll jump into the real-time charts, and we'll start looking for those diverse market opportunities. Could be Forex, could be indices, could be shares, could be commodities, metal, gold, etc. And by the way, feel free to type on the chat box at any moment in time if you would like me to check on specific ticker symbols. Happy to do that. And again, best way to do it is to do it on the SpeakUp mobile app, as I said, since it's going to provide for us a private communication environment where you guys could basically feel free to express yourselves in a way where I can help you better, because obviously if we don't interact, it's difficult for me to help. I could certainly conduct the session the way I would envision it to be, but at the same time, without your questions, I cannot customize it to your needs. Okay, so please make sure that you one more time install the SpeakUp app on your phone. It's a free app, and then you input the room key 18865 so we can be connected live during the session. Know that after the session is over, that room will disappear, and therefore everything we've done was private between us only, okay, for our eyes only. So, which is the beauty of attending live, by the way. Anyway, so I'd love to confirm, Jeff, any problem installing the app? Let me know. Everyone, if there is any issue, you guys let me know. Now, talking about getting organized, I would also like to highlight a couple of important coupon codes that City Index provided me for me to share with you guys because they are relevant. The one on the left talks about rewards and benefits. So if you go to the City Index website, you can use that QR code to go straight to the right place on the website. You're going to see the various rewards and benefits attached to being a City Index client. Some of them, for example, is to have rebates. Okay, so you trade, you pay commissions, but also you get rebates. So again, a series of benefits for you to explore in that page. And then on the right, we also have a QR code that points at a specific promotion related to knockout options. which basically knockout options are a type of option that exists in the CFD markets where you could trade and specify the risk and the leverage that you want to use, and that is with no slippage. Okay, so if a market was to move against you and you get taken out, you get knocked out of this trade, you would not suffer slippage, meaning that the price you specified at which you would want to be knocked out, that's the price you get, worst case scenario, no matter what. So that's pretty powerful. And then also, depending on the distance of your knockout options on the price, so you end up paying more or less, which has a direct impact on the margin, and therefore you can trade at a very, very high margin level, higher than the regular margin for CFD, while your risk is contained and under control. So again, it's a powerful product, and you get some promotion around that. You know, like you fund an account, you take a few trades, you get, I believe it's you get $200 back, something like that. So please take a look at the website so you can be well informed, and you can also talk to the guys, with City Index, on the website, for example, and you have a contact us section, and you can certainly be there and discuss it with them. Okay, so all of this, I would say, would do for the introduction of the session. I was waiting for you, Jeff, since you mentioned about my audio. I was kind of like wanted to ask you specifically for confirmation that you had no problems getting into the Speak Up app. I would love that if you could confirm for me, Jeff, since this is the first time that we're doing this. It would be very useful for me if you could, okay? And I mean, anyone else could also confirm. But again, Jeff was very kind at the beginning of the session to point at the fact that my microphone was muted. So that's why I'm pointing at Jeff for that little favor. Thank you so much. Anyway, so real-time charts, time to begin, okay? So let's go for it, okay? So we have a few things to do before we get started. First of all, I want to bring WebTrader, which is the web trading platform that City Index provides you with when you open a trading account. So notice that we have a collection of trades here. We have an order waiting to get filled on the Mexican peso here. So we need to talk about this. Certainly with this platform, if you click on Browse Markets, you're gonna get to see the very diverse set of markets that could be traded. For example, you want to trade stocks in Australia, in Canada, in the UK, in Singapore, in the US. So you have so many, Canada, for example, so many securities, so many products that you could trade. Could be indices, S&P, could be the UK indices, could be Asian indices, etc. Forex, and so on. Okay, so again, many things that could be traded, and I welcome you to go ahead and take a look by yourself. Okay, now once you have loaded the set of markets that you want to see, okay, you can certainly click on the ticker symbol itself, and a chart will load on the right. Probably a more efficient approach would be to click on Market 360, and then you have a larger size chart that loads in the middle of the screen, so you can do your drawing and your market analysis. You can take your trades buy and sell above, and then on the right you get information about the margin. I mentioned margin a moment ago. You get information about financing charges, if there are any, such as swaps in the currency markets. So all of this is here. Okay. Now, having said that, I prefer personally, and that's what I'm going to do, I prefer to use TradingView. So TradingView, okay, which is here. Okay, so TradingView is a very powerful platform which either runs on the web or can be downloaded and be installed on your computer, and it becomes a standalone application running on your computer outside of your web browser. Or it could also be an app that you install in your tablets or mobile phones, and no matter what, they are linked. So if on the mobile phone you draw a line, then you come to your computer and you see the line. If you draw the line on the computer and then you look at it in the tablet, it's there. So it's all connected, it's all mirrored. It's pretty nice. Okay. Now, apart from being pretty nice, what's very powerful is that you can come here. Let me one moment here, so I make sure that you see the bottom part of the screen. So I'm gonna remove the ticker symbol just for a moment, because I want you to see how in the bottom part of the screen you have this trading panel. Okay, you have this trading panel where if I click on it, I can now select brokers. City Index is in the list. If I click connect and I input my username and password, so next thing you know, I connect to my account, And once I am in my account, okay, even though I am using TradingView, which is not the platform provided by City Index, well, it is, as you can see, City Index green colored light. It is connected to the City Index account, and that means that whatever I do on TradingView now will be reflected on WebTrader, on the City Index mobile app, because it's the same account, including the market data. Okay, so for example, here I'm looking at the S&P ETF, and you can see how here on the top, sorry, not ETF, sorry for that, CFD, but you can see how on the top it says City Index, meaning that the market data, it's coming from City Index, and if I take a trade, okay, by, click buy or sell, and I take a trade, so this trade will end up in my City Index account, even though I am not using the City Index platform. I am using TradingView instead. And this is what I'm going to do, okay? And I'm going to be using TradingView, even though from time to time I will take a look at the platform as well, at the City Index platform as well, at the WebTrader, as it's called. So you can, basically learn to use both, because it's useful to have a backup line just in case, isn't it? So that way you learn to use both. Yeah. So anyway, so for the ones of you joining the session now, I see a few more people just joined. Just know that apart from using the regular chat box that you're welcome to do, of course, if you'd like your messages to be private, okay, which this has been requested in prior sessions. So please install the Speak Up app. It's a free mobile app that you could install on your mobile phone, both Android and iPhones, or any other device. And then you input the chat room key, which is 18865. And with that room key, you will be able now to connect with me and interact in a way that is private. So if you want to ask me for specific ticker symbols, or maybe you have a specific position running and you would like to discuss more privately what's going on, so this conversation now is between us. And even though the sessions are streamed live on YouTube and places like that, whatever you type won't be seen. Okay, so that's important, and hopefully that's helpful. So please connect on the Speak Up app and type a quick hello in there. Okay, great. So with all of this, I would say that we are now organized and ready to begin. And as always, I'm going to start from a slower trading style, a more relaxed trading style, such as investing long term. I'm going to start looking for one opportunity of that sort, and then I'm going to move into something a bit more active, and then something a bit more active, and something a bit more active, all the way until I end up looking for intraday trading opportunities. And I'm going to do that across assets. I'm going to use indices, I'm going to use currencies. If you feel like typing any specific symbol, as I said a few times, you can do it, okay? And that way we can be well connected, and they can provide solutions for everyone, no matter the type of trader that you are, okay? So I'm ready to make this session count. Hopefully you are too. I guess that's a great question for you to answer on the Speak Up app, okay? Just answer for me, please, on the Speak Up app if you are ready to make the session count, okay? Which I'm sure you are, but I'd love to see that written, okay? So you commit to it, and we're gonna be focusing. There is this 1 hour time instead of you're gonna go text your friends, okay? I need you with me here, 100% focus, okay? Because this is powerful stuff. Anyway, so long term, okay? So for long term, as you may have seen if you attended sessions before, I love to rely on swaps for long-term opportunities in trading, okay? And in this case, just to save a little bit of time, I'm just gonna go straight down to the US dollar Mexican peso, where last week we identified a trade. We placed an order last week, okay, where we will want to sell at this price. We will want to have a stop in case we're wrong at that price, and we will want to have a target profit to take profit down here in case we're right. Okay, so all of this was planned last week. Okay, all of this was planned last week. Unfortunately, since the last week, the Mexican peso never came to our entry, and therefore we didn't get into the trade. We expect this to happen, but that hasn't happened yet because we didn't get to this entry point, this entry point yet. Okay, so we're gonna have to review this trade. A whole week has passed and we did not get filled, so we're gonna have to review this trade and see if the trade is still valid or not. Okay, if we short Mexican peso for a long-term trade, the beauty is that while we stay in this potentially long-term trade, we are going to be receiving swaps as payment that happens just because time passes. So that's pretty powerful, and that's because I'm going to be there for long term because it's investing. So that's why I want to rely on swaps to have a second ingredient working for me from behind the scenes, because when you trade for the long term, what's the issue? Well, the issue is that the longer the term you are exposed to a trade, the longer the time risk you assume, meaning that anything crazy could happen. Maybe another bomb explodes somewhere, maybe some other economical news shows up anywhere, and next thing you know, a trade that may have been working for you for a while then turns around and stops you out. So the type of trades that have the least amount of time exposure is intraday trading. The types of trades that have the greatest amount of time exposure is the long-term investing, which in a way could be seen as safer, but in another way, it has more time risk, isn't it? So in order to offset the time risk, I want to collect swaps. So for the ones of you that may not be familiar to this concept, take a look. If I look at Forex, okay, and I type in a moment here, it's going to load. Okay. Okay, so far you guys have been quite shy on the chat room. Okay, so just type something in there. Okay, just so we test the waters. So if I look at Mexican peso, right, and I look at Mexican peso against the US, and I look at market 360, and I look at a finance chart. So notice that if I get short, I'm gonna receive $1.69 every 10,000 US dollars I got in the trade. Okay, of course I don't need $10,000 because I trade on margin, but every time I got this amount of money involved, which is less when you use the margin, is much less. So you get paid $1.69 per day. So let's say you are gonna be in this trade for 6 months, so you're gonna collect many times that number, okay, which is great. Okay, and from a return on investment point of view, it makes a big difference, and therefore offsets a little bit of the extra time risk that you have just because you happen to be running a long-term investing, okay, if that was to be your case. So good. So we have that, right? So now let's review the trade. Okay, now that you understand my thinking. Okay, by the way, notice how we got a green UFO there, and price hit the dotted line, and the moment it hit the dotted line, it started moving in the opposite direction. So again, the price where we set our target is definitely a very well set price. So congratulations to setting the target. Again, unfortunately, we did not meet our entry. Okay, so let's go ahead and revisit the trade plan to find out if the plan that we had last week is still valid or not. And the first thing that I want you to notice is that the climate is still valid. Okay, so we are looking at a weekly time frame for the US dollar Mexican peso, and the climate is still confirmed to the downside. So in that sense, shorting brings to us a statistical advantage, and we certainly still want to be a seller of the Mexican peso, even though in the last 3 days it's been going up. Okay, but that's what we want. We want it to become expensive in the context of a down market, so when it gets to a key price point, it's going to fall again, or is likely going to fall again. Okay, so now what is the key price point? Well, the key price point last week was where the blue line is, okay, which is that blue line. It's the same one. Okay, but guess what? Today, 1 week later, the key price point is lower because the moving averages are moving, like the name suggests, right? So the new location for the moving average would be more like somewhere here. Okay. So now, do we have any red UFO on the daily time frame on the right? No, we don't. What about the 4-hour time frame? Okay, on the 4-hour time frame. Okay, I may need to move my line a bit to the left because we don't see it. Here we go. Okay, so on the right, exactly. So here is my my blue line, and notice how there is a red UFO. The one that we decided to use last week is there. This is my entry and this is my stop based on this red UFO. But now, because the moving average went down, so now the relevant line is lower. Okay, the relevant line is lower. So that is not a good news, okay, because that UFO is not a valid candidate anymore for the trade. So I'm going to give it a last chance, okay, by changing to the 1-hour time frame. But notice how, unfortunately, there is a UFO, but it's below the line, and the UFO that we want is above the line. So basically, that line is in the middle of nowhere. And when a line is in the middle of nowhere, okay, this type of action is what I would expect. The price comes through the average, okay, like the average is not even there, and then may come back down or maybe not, but the average is not respected like what I want to accomplish, which is this type of respect. Okay, this type of respect normally happens when not only you have an average, but you also have UFOs around the average, which we don't have at this moment in time. So, in other words, this trade is not valid anymore, and it is my job to cancel it, even though obviously that doesn't make me too happy. But hey, the market is the boss. I don't have the power to make up opportunities. So how do I cancel the order? Notice I'm going to do it with WebTrader just to show you how it's done with WebTrader. So I'm going to click on edit order for the Mexican peso, and I have an option here which is delete order. And the moment I delete order, it's gone. Okay. And by the way, it's gone from TradingView too, because TradingView and WebTrader are connected. You can see here how the order is being canceled on TradingView here. If I had canceled it on TradingView, it would have been canceled on WebTrader as well. Okay. So yeah, so that's it for the Mexican peso. And by the way, I did my homework before the session started because obviously I trade these markets, and there was no other opportunity that was acceptable for short swaps for long-term trading. So I'm gonna move to long swaps and examine this set of markets and see if we have an opportunity. Okay, so with the Kiwi Swissy, okay, so we have an up climate, and by the way, I'm noticing that you may not see it. So let me do this so you can see my climate. So notice how the climate is non-confirmed, is a thin dot, is not a thick dot, is a thin dot. And because it's not confirmed, well, obviously, statistics are not on our side, and therefore I'm going to pass on the Kiwi Swissy. What about the Kiwi Yen? Well, with the Kiwi Yen, we do have something that is acceptable. Okay, we do have something that is acceptable, which is a blue climate with a thick dot. Okay, meaning that's a confirmed market. Okay, good, wonderful. Hey guys, I want to insist and persist, and I'm sorry about that, but it's my job, okay, because I want to help you as much as I can. And you guys have been extremely shy on the Speak Up app. So please confirm to me, if you don't mind, on the Speak Up app that all is good. And if you have not installed the Speak Up app, if you could confirm that you are in the process of installing it on the chat box, on the regular chat box on YouTube, for example, or Facebook, so that would be great. Anyway, so climate is confirmed with the Kiwi Yen. So let's do our job, which is to draw a ray lining up with 8538, okay, which is the location of the EMA. Okay, I'm just drawing a ray, okay, so we can see where that falls in the daily time frame on the right. Okay, on the right you can see that there is a green UFO on the daily time frame down here. Okay, but the blue line is located much higher. Okay, so that is not the one we want to use, obviously, because it's not enveloping the UFO. So I'm moving to the 4-hour time frame to see if there is anything on the 4-hour time frame, but no UFO on the 4-hour time frame. There is one, but much lower. Okay, so no confluence, so less probability, so we pass. And if I look at the 1-hour time frame, there is a UFO here, but to be honest, I'm not totally comfortable. I could, okay, but I'm not totally comfortable because it's a 1-hour time frame, and 1-hour time frame, it's definitely powerful, but I'm looking for a long-term investment opportunity. So I feel it's a little bit of a lower time, a bit too low as a time frame. Okay, a bit too low as a time frame. Okay. Thank you for confirming, Jeff, that all is good. Okay. Did you type, Jeff, on the Speak Up app by any chance? I'd love to know that because I didn't see your text there on the Speak Up app. So I would love it if you could do that. Again, I'm going to remind everybody of the room key. So now what else? The Aussie Swissy, as you can see, is a red climate. The Aussie Yen, it's a non-confirmed climate. Sing Dollar Yen down. CAD Swiss down. CAD Yen down. GBP Swiss, it's blue but not confirmed. Same with the Pound Yen. US Swissy is down. And US Dollar Yen, it's down. So bad news this week, really, for opportunities to profit from swaps. It's either you are in a trade from weeks ago and then you are enjoying your trade and your swaps, but this week entering a new trade based on swaps basically is not available. Okay, it's not available based on the method I use. You may use other methods that are valid as well, and there are many ways on how to trade. Of course, in these sessions I show you how I trade, which is very simple, right? The way on how I trade is very, very simple. I look at the climate to know if I should be a buyer or a seller. And when I know that I should be a buyer or a seller, by the way, the climate is free for all of you new to the sessions. So once I know if being a buyer or a seller is what gives me a statistical advantage, then I turn to the chart on the right, turn on the UFOs, and then look at my entries and my exits after I know if I should be a buyer or a seller. It's kind of like a two-step approach, isn't it? Very simple. But anyway, so by using my approach to trading, no swaps for me this week. So I'm going to move to the city index, full list of markets, and we're going to be looking at others, okay? With the US dollar Japanese yen, let me see. Good one, Jeff. And I can see that you do not mind, and I know you, and I appreciate that very much, Jeff. You do not mind to type on the public chat on YouTube in your case, okay? So that's appreciated. I'd love you to try the chat on the speak up, okay? Just for fun as well. So I'm gonna get back to WebTrader, okay? And I want to check browse markets, FX. I want to check the Singapore dollar, okay? Which, by the way, the standardized Forex symbol for Sing dollar is not SGD USD, it's actually USD SGD, okay? And this is thanks to ISO, International Standardization Organization. So it's not me saying it, it's just like that. And when we look at finance charge for the market, notice that both long and short, you would be a payer. Okay, it's a very small payment, but you would be a payer no matter if you go long or if you go short. So in that sense, I don't feel too comfortable to do a long-term trade on the US dollar, Sing dollar. Okay, having said that, it's a fantastic market to trade, and therefore planning on a little bit of a short-term trade. Okay, something based on the daily time frame, for example. For sure, I'm going to be delighted to do it. So let's go ahead and do it, okay? So what do we have? Well, actually, with the daily time frame, I'm just going to pass, okay? And why? Well, because, again, when looking at the climate, okay, and let me make space on the screen so you guys can see what I see. So when looking at the climate, okay, so notice how the climate is red. So selling should be our action, right? We want to be a seller. But the normal thing to happen based on statistics is that when that market falls, it falls in waves of 5 to 6 days at a time. And that market has been falling for 11 days straight. So could it continue falling lower? Of course, absolutely. But the question is it likely, right? And the answer is no. Okay, the answer is no. Okay. That's what statistics suggest. Okay, so getting ready to go short now may not be a good idea because we may not get the drop, or maybe we get a drop which lasts only a day or two and then reverses. So you see yourself in a profit for a while and then you get stopped out. And why? Well, because, statistically speaking, we're talking about a situation which is more unsustainable versus probable, right? And again, we've seen conditions in the market where a market was supposed to move in waves of 5 candles at a time and then it moved 20 candles. Could that happen? Of course, but it's unlikely, right? So odds are not in our favor by betting short on this time frame. So what can I do? Not a problem. Move to a lower time frame, such as 4 hours. And when we look at 4 hours, notice that we are in an up climate. Okay, the 4-hour time frame is already giving us permission to trade in the opposite direction. Of course, that is only if we find a valid entry. So let's go ahead and take a look. So 3770, that's the location of the EMA, somewhere here. Okay, so if I draw a ray, okay, and on the right, I look at a time frame which is a little less than 4 hours, let's say 1 hour. So I'm gonna find that there is my line is here, okay, and there is a UFO above. That one doesn't help because it's above, and there is a UFO below. And you know what? It works. This is a valid setup. And you may say, wait a minute, Jose, don't you need the blue line to be somewhere inside the UFO? And the answer is yes, I need that. Okay, but that's exactly what's going to happen. If this market falls to the UFO, my blue line will be somewhere there. Why? Because it's a moving average. And as the first word suggests, it's moving. meaning that as it starts going down, the black line, which is currently pointing at 70, may go down by 10 or 15 pips or something like that, and now it's going to be inside that UFO at 59 instead of 70. Okay, and I'm just doing a little bit of an anticipation here, but hey, that's trading, my friends. Okay, especially when you know something for sure, which is that a moving average moves, as the word suggests, and therefore you want to be a bit dynamic on your planning instead of being rigid, like nothing changes. Okay, the markets are dynamic, so we have to be dynamic as well. So look, this is a valid entry point here to buy the Sing dollar at 137.61. So 137.61, it's that green number, okay, which is coming from this UFO region on the chart. Okay, that the UFO is here, but it starts, upper price is 61, bottom price is 32. So buying at 61 with a stop loss below 37.32. Okay, I'm just gonna make it 25. Okay, something like that. So buying at 61 with a stop at 25 makes a lot of sense. But now the real question is, okay, what about my target, right? And I just clicked on the wrong place. Sorry for that. If I turn on the UFOs, okay, if I turn on the UFOs on the 4-hour time frame, well, I can see that there is a UFO right there. Okay, right there. So price is entering a UFO. That UFO is currently located at 15. I am delighted that this is the case, to be honest. Okay, I'm delighted because if this market comes down to where the blue line is, okay, and bounces back up, okay, is likely going to go further away, because the fact that price is turning here, assuming this is going to happen, means that some of those unfilled orders get filled, maybe all of them got filled, okay, and that will neutralize all the buyers. No buyers are left, because for people to sell, someone has to buy from. So many of the sell unfilled orders will get filled because buyers are on the other side, and then the market will fall with no buyers until we get to the next UFO where the buyers are, and then the price will turn, and we are likely going to reach the next UFO at 139.61. Okay, so 139.61 is my ideal target. Okay, that is a 5.56 to 1. We talked about in prior sessions, I won't today just to save a bit of time, but we talked about in prior sessions that it's always helpful when you see a target which is quite far, like in this case 5.6 to 1. It's not a joke, it's very nice. So many times, just like in life, sometimes when it's too good to be true, it may be too good to be true. So in that sense, it's always healthy to go ahead and maybe take profit somewhere in between, or start managing your trade, moving your stop, protecting your profit as the market starts moving in your favor. Okay, so in other words, the trade plan that we're talking about implies an entry at 61, which is our green UFO entry, with a stop at 25, which is below the green UFO that we discussed, and then the target is going to be the red UFO from the 4-hour time frame, located at 39.61. That's the trade plan. Okay, now how much do you want to risk? Well, every time we take a trade, I am risking $100 per trade, isn't it? That's how I've been doing it. So that's what I plan to do. Okay, and also to reinforce a bit more the various things that we are learning in these sessions. So I would like to bring to the screen a little bit of a trade plan sheet, so we can go ahead and document this a bit better. You guys may want to take a screenshot. So we are going long the US dollar Sing dollar, okay, entry, okay, located at 137.61 with a stop located at 137.25 with a final target located at 139.61. And something I love to do, which is optional, but I personally love to do it, is to add a safety target. And the way to add a safety target is very simple. You take the distance between entry and stop, which is 61 minus 25. So we're talking about 36 pips, and you add that to your entry. So 36 plus 61, that's 97, and therefore 137.97, it's your safety target. So if you do that, okay, per unit, okay, okay, per unit. Okay, in Forex is 1,000, right? It's a unit. So this is providing you, this is generating, sorry, not providing you, but generating a risk of $2.60 per lot, okay? That, which is 1,000, okay? So this is the trade. Okay, now, as you may be taking a screenshot and as I place the order in, because even though this is the risk per lot, so what I'm going to do is I'm going to plan to risk 100, like I've been doing in all the prior sessions. So I'm entering this trade with $100 of risk. Okay, so the trade is in. That's it. So I want to go back to here and explain a bit more about the safety target concept, which is something that I never explain here on the City Index sessions that we do, the CFD sessions that we do in partnership with City Index. Okay, that is something that I have never explained, and I would like to explain why at 97 and what do I do when you get there. So that's something quite important to understand. Okay, so look, based on what I've done, okay. So I am assuming $2.6 of risk, okay, with the size I taken, which is 38,000. So I am assuming $100 of risk total. Okay, so this is my risk. If I'm wrong, I'm gonna lose 100. Okay, so this is my trade. But notice that if instead of taking 100% of the risk at entry, right, I was to take 50% of the risk, meaning 50% of the size, right, one time, and 50% of the time another time, with both time the same stop. Okay, both time the same stop. Okay, one and the both would have the same stop, but one of them with exit at safety, and one of them with exit at the final target. So what would happen? Well, think about this. A few things could happen when you take a trade, right? So option number one, Sing dollar went down, hit our UFO, we took the trade, and it went straight to the target. Okay, so congratulations. This is case number one. Case number two, so price came to our UFO. Okay, that market moved for a bit in our favor, and then stop us out below the UFO. And while we were in profit for a while, in the end we lost. And case number three, price came to the UFO. That was not what I wanted to draw. Okay, here we go. And then price maybe did something like that, and then went down straight and never gave us any profit. It was a straight loss. Okay, we went out here. So of course, the case in the bottom, we cannot do anything about it, right? If you get into a trade and immediately the market moves against you, then the most you can do is to use a knockout option or to have a stop, like I have, and that's all. That's it. There is nothing else you can do, isn't it? So that's it, done. So I'm gonna remove it because that one, we all know that the only way to protect it is to use stops or use knockout options, which we always do. Okay. Now, case number one is also something that there's nothing to be done. To be honest, I mean, you could, as discussed in prior session, you can trail your stop that originally was here. So as it's moving up, you're trailing your stop, you're trailing your stop, you're trailing your stop, you're trailing your stop, trailing your stop. So if you reach your target, congratulations. If you didn't reach your target and goes down, so then you will be out here. So you gave up a little bit of profit, but you know what? You protected most of the profit you made. So that's pretty nice. So case number one and case number three, I guess, are pretty clear and there is not much to discuss. But what about case number two, which is, again, when the market comes to your UFO and you get into a trade and then it starts moving your way for a while and then finally it stops you out. So that's very sad, if I could use that word, because for a while you were profiting and you end up with a sad story, which is you got a loss. Okay, a sad story. I'm kind of joking because losses are part of trading. We traders always take losses, just like we always take winners. We also take losses. It's part of trading. There's no way you can trade with no losses. So we all know that, right? But it's a sad story that for a while actually it looked good, right? So what can we do? Well, that's when the safety target comes into place. So if you notice how I calculated the target, the safety target, I calculated the distance between entry and stop, which was 36 pips, and I added 36 pips to my entry, making it 97. In other words, the distance between entry to stop is the same as the distance between entry to safety target. Same distance. So what happens if I travel by 36 pips, and I close half of my position at 36 pips. Well, what happens is that I have made 36 pips of profits time 50% of my position. That's what I've made. So now, what if after I got to my UFO and it moved by 36 pips, and here I took my 50% profit on 36 pips, and then maybe it kept going a bit more, but finally it came against me and stopped me out. So what happens? Well, what happens is that then I lost 36 pips, right? With my other 50% of the position. So what's my net outcome for the trade? It's break even. I didn't make money, I didn't lose money, but it's nice because in the end I was wrong on the trade and I didn't lose. Okay, so that's why we call this a safety target, which adds some safety in case the market is not going to continue all the way, in case the climate gets interrupted. Notice how the climates, they tend to last. Okay, but there are times where the climate go from red to blue, blue to red, and when the market is less decided, when there is maybe extra peak of volatility in the marketplace, the market may move sideways. And moving sideways, it's difficult for you to trade. It's difficult to get to a far target if the market is moving sideways. But when the market is moving sideways, it is actually doable to get to your safety target. So getting to the safety target, removing the risk of the trade, and now if you go to the final target, congratulations. If you don't, you haven't lost money, adds safety, hence the name of such target. Okay, so anyway, so the trade is documented on the screen now. Hopefully this explanation is adding value to how you guys trade or may trade, or you may want to experience with it. I can see how everybody is still very, very, very shy in the meeting room. No notes in the meeting room. I cannot believe this, guys. You guys asked me to have a private room in prayer sessions. So, not a private room, sorry. Private chat room, so we can chat privately during the session. So no need to reveal your names. No need to, have anything seen publicly. It's for my eyes only. I'd love to see you guys to use it, even if it's just to say hi, guys. So at least I know it's working well on your end, and maybe you have no questions today, which is fair enough. Okay, cool. So anyway, so we have it. Okay, and so this is the trade, and this is your answer, Jeff. Thank you for such a good question and such a great opportunity for me to explain something that hopefully is appreciated and has value for you guys. Okay, always looking to helping you guys to be safe in trading, and since there is nothing in trading that is a sure thing, there is always uncertainty for the future, isn't it? By stacking odds in your favor using auto climate, using auto UFOs, by stacking odds in your favor by applying discipline when it comes to risk management. Oh, sorry for that. I just clicked on the wrong place. So obviously all of those things are going to help you to trade better. Anyway, so let's change market. Okay, I'm going to go back to the daily time frame, and I would like to do some market analysis on the S&P. Okay, do some market analysis on the S&P. And so where are we at? Okay, so the S&P, it's approaching the EMA on the daily time frame. We are in a confirmed climate, 7 out of 909. So this market still, statistically speaking, could continue going higher for a bit more. So certainly that opens the door for us to plan a trade on the S&P. And the way to do it, as always, will be to draw a line around 39.33. Okay, and see if there is any UFO around that line, and we'll start with a 4-hour time frame. So on the 4-hour time frame, no UFO. On the 1-hour time frame, there is a UFO a bit lower, 25 and 47. That one is tough. We talked about the concept of the moving average moving down as prices go down, which is 100% correct. But given the fact that we are very close to the EMA, I would envision that EMA, that blue line, to move by a little bit, but may not move enough to be inside the UFO. Okay, so the S&P is not giving us in that particular time frame a setup that I would approve. So I'm going to check on the Nasdaq and see what's going on. And the Nasdaq, to be honest, is giving me a bit of concern here. As you can see here, we have a climate which is unconfirmed. Okay, climate which is unconfirmed, and therefore the Nasdaq on that time frame will pass. Later, I will look for intraday opportunities. We may have one. Last week, the one that we took last week was profitable, isn't it? Hopefully, a bunch of you had an opportunity to practice that trade. But yeah, we'll ideally find more today. Okay, so the Dow Jones is actually in a bad position. It's showing a lot of strength, which is nice, but at the same time, statistically speaking, it's been in that confirmed climate for 11 candles, where statistics suggest a normal thing to be is 744. So statistically speaking, that market is unsustainable, and therefore trading in that direction in that time frame would probably be a mistake. Okay, so we'll look at other time frames later. What about the FTSE? Okay, the UK market, 21 out of 6, so very, very exaggerated climate here. What about the DAX? 28 out of 6, extremely exaggerated, very powerful markets, but of course trading in that direction is really a gamble, okay, given what statistics suggest. And of course, you may make money when you gamble, but that's not what I'm here for, okay? So what about the Singapore index? 7 out of 6. Okay, so again, same problematic situation where we are reaching the statistical end. Okay, so we'll look at lower time frames for the indices, but it seems that the good place with market indices will probably be found in lower time frames. So I will look into that in a moment. Okay. Cool. So just checking if you guys gave me any message here. No messages. Okay. I don't know what to think. You guys left me alone there. I thought this is something that you guys were going to appreciate given your demand. Anyway, so crude oil in a down climate. Okay, so if we look at the crude oil climate here, so we can see is red and thick. So it's a confirmed climate to the downside. And when pointing at 50, which is the location of the EMA, okay, somewhere here. So when pointing at this price point, so we can see how. Let's start with the 4-hour time frame first, okay? So we can do this properly. So we can see how this line is inside of a red UFO. Okay, so this is indeed a valid setup for us to plan on shorting crude oil at those prices. Okay, so now if we do that, where is the target going to be? And the next target should be located at 73.91. Okay, so let's take a look at that. If we enter at 83.15.4, okay, if we enter at this price, which is the bottom price of the red UFO, 83.15.4, okay, and we have a stop above the red UFO, which is 81.4. Okay, so let's make it, let's say 82, 84.82. If we do that, okay, so it's too large as a risk for me to risk 100. Okay, so I guess that if I want to risk, why is it not calculating? Oh yes, sell. This was very silly of me. I'm like, why is this happening? Okay, so 100, yes, but still notice that if I add 1 unit, which is the minimum, so the risk provided is 166. So if I want to take this trade with $100 of risk, I cannot. Okay, given the time frame being used, given the size of the UFO, the distance between stop and entry, this is a trade which is too risky if your goal is to risk $100. Okay, so what can I do? Well, again, 1 is the minimum, right? If I want to make this trade less risky, you can always enter a bit deeper into the UFO. So if I do 25, for example, so now my risk is 56. If I do 2360, for example, so now my risk is 122. If I do, let's say 70, so now my risk is, let's say if I do 75, so now my risk is 106. So what if I do 78, something like that, 79, okay, wow, 83. Okay, here we go. So with that, your risk is 100. Okay, more or less. Of course, the price is moving, so it's changing a bit. But now this would mean that your entry point is 83, 80 something, which is somewhere here, which is nice because it's lining up with the UFO. But I'm not in love with that approach because what may happen is that price comes here. Notice how the blue line is below, okay? And unfilled orders are here already. The moving average may act as a place where more orders are added, and next thing you know, the market falls and you miss your trade. So I am not a lover of doing that. And on top of that, I prefer to use a minimum of 2 units. Why? Because if I'm going to use the approach of having a safety target, I need at least 2 units. So 1 unit is exited at my safety target, and the other unit is exited at my final target. So I need at least 2. Okay, I cannot do it with 1. Okay, so now of course 2 would be way too much risk. It would be like triple the risk I want, and therefore it would not work. So for me to attack crude oil, I would need to look at it in a lower time frame. In this case, of course, crude oil has been very volatile, and this is the beauty of trading. Everything makes sense. Everything aligns itself. So the market has been very volatile, and therefore the sizes of those UFOs are large. They are fat UFOs, if I could call it like that. And because they are fat, so the distance between entry and stop is large. And why? Well, because there is volatility, and therefore there is risk, right? So it's all in line. When the markets are quiet and boring, so those UFOs are narrow, they are not fat UFOs, and therefore the distance between entry and stop is less, and therefore the risk is less. Why? Because there is less volatility and therefore less risk. So it's all making sense, isn't it? So careful with crude oil. This is kind of like the message that crude oil is telling us. It's saying, hey, I'm moving, I'm volatile. Look, I love to trade volatile markets, but you certainly need a larger account to do that. And again, if your appetite for risk was $100, which is what I'm doing per trade in our live sessions, so that would not be good enough, okay, for this market to be traded. So later I will come back to this market and I will look at it from the point of view of intraday trades. I believe we also had a trade on crude oil that also was profitable, I believe, if I'm not mistaken. That was from the last week. Anyway, so let's go ahead and take a look at daily time frames for the majors, okay, and then a look at lower time frames. So we have here the Aussie dollar, which is changing climate, the euro, which is changing climate, the pound, which is not changing climate, but it's been running 7 out of 486. Okay, so a bit too extended probably. What about the Kiwi? 11 out of 5. What about US dollar CAD? Non-confirmed climate. What about the Swissy? 11 out of 4.8. And what about the yen? The yen very similar to the Sing dollar. Okay, so again, it seems that most markets, today, this week, as the week begins, are suggesting to be traded intraday because for the long term we found none, and for the daily time frames, I mean, for the 4-hour time frame climate, the US dollar, Singapore dollar was a good candidate, and we placed an order, but other markets were not. Okay, so we got 5 minutes left. So what I'm going to do is I'm going to move from daily all the way to 1-hour climates because we already got one trade with a 4-hour climate. So we did weekly, we did daily, we did one trade with the 4 hours, and now I'm going to move to the 1-hour climates, okay, to find a quick one. And with the 1-hour climate, I would like to look at the US dollar, sorry, not the US dollar, the S&P, and notice how the S&P is in a down climate, 5 out of 5. What about the NASDAQ? 11 out of 5. What about Wall Street? Well, actually, Wall Street it's pointing at going long with a new climate that has just started, okay? 1 out of 6. So I'm going to rely on that, okay? And ideally, we'll find a trade that is acceptable. So I'm going to move to the 15-minute time frame on the right. We're going to be drawing a ray around 33,651, right there. And notice how on the 15-minute time frame, there is no UFO. If I move to the 5-minute time frame, no UFO. Okay, so this is likely going not to be well supported. What about the UK markets? The climate is non-confirmed. Okay, thin dots. Climate is non-confirmed. For a trade. So I'm just gonna move here where the average is, okay? And we're gonna be trying to find an opportunity. I'm gonna start with a 15-minute time frame. And the whole thing is a red UFO, okay? All of this thing is a red UFO going all the way from here, all the way to the red line. So no wonder that price is going down. We are in a red zone, right? So it's a very, very large one. That's what's unfortunate, okay? So yeah, so I believe that what's very, very likely is that this market will just keep falling, at least until the market opens, and then a series of things may happen. But again, just in case I'm wrong, so I'm gonna place a trade where I'm gonna take a trade where the EMA is with a stop above the UFO. And because those two UFOs are so close to each other, I'm gonna place my stop above 39.57.6. My stop is going to be above this. Okay, so let's go ahead and plan on selling. The sell price is going to be 39. Let's call it 49, which is where the EMA is, with a stop located at 39. We'll make it 58. Okay, so if we risk $100, so we're talking about 11 units. So I can certainly here work on my as discussed before, I can certainly work on my two exits, okay, safety target and final target. And then if I was to do this trade, so let's see if I have a reasonable target around, and that would be 39.25.6. That would be the target, which sets us up for a 2.6 to 1, okay? That's the green UFO I am shooting for here at 39.25.6, which is the price I have just input. So this trade is indeed valid. So I'm just gonna document it on the screen so you can take your last screenshot of the day, and I'm gonna place the order, both. So we are trading, so US S&P 500 CFD. This is a trade to go short. Okay, entry 39.49.0 with a stop loss located at 39.58.0 with a final target located at 39.25.6. And now what I'm going to do is calculate the distance between my entry and my stop, like I did before. So it's 58 minus 49. We're talking about 9 points of risk. If I take that below the entry, which is 39.49, it's going to be 40. So my safety target would be 39.40, okay, 0.0. Okay, that would be my safety target. To keep it simple, I'm just going to take the trade with one target. Okay, we'll talk about multiple target, executions in another session. But yeah, I'm just going to go for it here with a risk of $100. Okay, where I am shooting for an entry here with a stop there with a target here. Okay, so this is the trade, my friends, and the session is over for today. And before we go, guys, okay, this one you cannot say no. Okay, I would like you all to send a quick goodbye message on the SpeakUp app. You guys asked me to set it up. I did. And I will just want to make sure it's working fine for you guys. So if you don't mind, please just give a quick message, a quick goodbye would do. But that way, at least I know all is good, for you guys, and we can use it happily in many other future sessions to come. Okay, so please let me know about that, and I will see you next time. Here are the two trades that we placed in the accounts today: the trade with the Singapore dollar and the trade with the S&P CFD. Cool, everybody. Very, very nice. Thank you for joining me. Jeff, MES is a symbol for a futures contract, so that's not a CFD. The beauty of CFDs is that everything in life got pros and cons. Okay, trading the futures contracts is certainly a very valid choice as well. But basically, with futures contracts, you have a predefined size per contract. With micro E-minis, you got 10 times the size. Where the beauty with CFDs is that you make whatever size you want the moment you play with that unit number, which could be decimal places if you'd like. So you can make it as large or small as you choose. Okay? You cannot do that with futures, and that's certainly an advantage of trading CFDs. Okay, cool. Everybody, my pleasure as always. I will see you in the next one. Trade safe, be well, and see you then. Bye-bye, everyone.